So in this chapter, we'll be discussing another contemporary issue that is of very important. That is money laundering. So unlike cash transactions, banking transactions leave a trail. Okay, trail in the sense you'll be knowing the parties to the transaction, who is the person who has sent the money and who is the person who has received the money. So banking transactions leave a trail. So government agencies can track the trail of banking transactions easily to find out who the sender and receiver was. But as you know, criminal elements like terrorists and drug traffickers, etc., will be having problem if they open bank account and they do transactions. In that case, they'll be easily caught. So money laundering is a term used to describe the process by which criminals disguise the ownership of funds and they make them appear as if they are from a legitimate source. This is a very serious problem, and every year billions of dollars of criminal money is laundered through financial institutions. So money laundering is usually done in 3 stages: placement, layering, and integration. The first stage is placement. In this stage, the launderer gets the money into the bank. So usually they do this in the form of cash deposits, because you may have observed in banks it is very easy to deposit cash. Banks do not ask you details unless it is of a very large amount. You just have to fill in the pay slip and write the beneficiary's account number. People without bank account can also deposit cash in other person's account. So this is very ideal for criminal elements who want to deposit cash without revealing their identity. So to address such problems, there is a rule that any person depositing cash above 50,000 should provide their PAN number. This we discussed in earlier chapter. The next stage is the layering. So in this stage, the money deposited in the layering stage is split into different small amounts and is sent to different bank accounts and different names in different countries. For example, say a terrorist has deposited 1 lakh into the account of A. Then what A will do is he'll transfer 5,000 in the account of B, another 3,000 into account of B, another 8,000 in the account of C, and so on. He'll split this large amount into multiple small amounts and transfer this into different persons' accounts in different cities, different countries. Then what they will do at the end of the day, all the people who have received the money, B, C, D, etc., they will again transfer it to some other accounts, okay, in different currency also. Or they may purchase some items like truck or diamonds, etc. They'll get not just the small money from A, but similar money from a number of others. So entire money is large. Okay. So at this stage, the aim is to route the money in such a way to change its form and make it difficult to follow. So one term you might have heard in this context is smurfing. This is a process where a person breaks up large chunks of cash and deposits them over an extended period of time. And in the final stage of integration, the money will re-enter the banking system as if it has come from a legitimate transaction. So this is how money laundering is done. So banks have taken a number of steps to prevent money laundering. Now at the time of account opening, banks are very cautious. They will follow what is known as KYC and due diligence, which we have discussed already. Also, as we discussed, that cash deposits above 50,000 should furnish PAN number. Bank employees are also trained to carefully look at suspicious transactions, and they have to report to police any such transactions. Normally, banks should not divulge details of their customers, but in this case, it will not be treated as violation of confidentiality. Suspicious transactions can be reported to police. And also, banks are developing strong information technology systems to detect fraudulent transactions. So in your interviews, they can ask you questions like, what is money laundering? What are the 3 stages in which money laundering is done? What is the placement stage? What is layering stage? What is integration stage? What is meant by smurfing? What are some steps banks take to prevent money laundering? So in this context, they can ask you about FIU also. FIU stands for Financial Intelligence Unit. So entities like banks, capital market intermediaries, casinos, dealers and precious metals, etc., required to file periodic reports. So FIU, that is the Financial Intelligence Unit, receives these reports on cash transactions, on suspicious transactions, funds received by non-profit organizations, and it will maintain a database. And it will be sharing these details with various agencies. So in interviews, they can ask you, what is the function of Financial Intelligence Unit? You should be able to explain it.